Good morning. I think that's my cue to begin. Good morning and welcome everyone to our Bitcoin and Lightning Network conversation. We're going to be joined today by Chris Hunter, co-founder of Galoy Money. Through Chris's Bitcoin Lightning digital wallet, known as the Bitcoin Beach, he's created an emerging community of users focused on creating a circular economy of Bitcoin. We're going to dig into that with Chris today. He's definitely one of the leading pioneers and one of the biggest Bitcoin and Lightning Network developers, and key to its adoption in El Salvador. So on behalf of CAMTIC, the IT Industry Association of Costa Rica, our colleagues at Leeds University, I welcome you all. My name is Paul Fervoy. I'm president of CAMTIC. I'm a professor here at Leeds University. And we're also joined by several of our sponsors, such as the FinTech Association of Central America. We have the Association of Blockchain, and we have the FinTech chapter of CAMTIC. These are the different associations related to the IT industry here, Chris, that are all related to developing solutions around FinTech, blockchain, cryptocurrencies. And they're all very excited with their membership to join us today in this conversation. So without further ado, I'd like to welcome you, Chris, to this conversation. And I know that you said that you had a few slides you'd like to share with us, but first, tell us a little bit about yourself. You are co-founder of Galoy. Tell us what you're up to today, and where do we find you this morning?
Sure. So I am in South Florida in Palm Beach, just north of Miami. Miami is my home. I'm originally from New York, but I live in Miami now, meeting with some Bitcoin investors here in Palm Beach today and speaking at another event shortly after this. By way of background, I'm an engineer by training, spent most of my career working on clean energy and renewable energy issues, built a number of companies there, went down the Bitcoin rabbit hole more than 8 years ago. And for the last few years, I've been building, as you kind of alluded to, Bitcoin focused businesses to basically, focus on something that's really important, which is, Bitcoin is money. And we want to make it easy for people around the world to use Bitcoin as money. And we're very early in that journey, but I'm happy to chat today about some of our experiences over the last couple of years, where we're at right now, and perhaps even more importantly, where we might go for the next 5 or 10 years. Paul, I think you're on mute.
Thanks for that. You had mentioned that you've been doing this for the better part of a decade already. How did you originally get into the Bitcoin space?
The very short version is in late 2013, a trusted friend went to attend Singularity University, which is put on by the co-founders of Google and Diamandas and others, where they wanted to train up technologists to try to tackle some of the biggest problems of the world. And long story short, my dear friend Tom, who attended that, clued me into Bitcoin, and quite simply, I started reading not just Satoshi white paper, but a lot of other things. And early on in 2014, things really clicked for me where, and I'll talk about this in my presentation, I started to understand that Bitcoin is one of the most important technologies ever invented for humankind. And I realized that might sound a little bit hyperbolic or a little bit crazy, but I truly believe that Bitcoin is on par with fire and the wheel and the invention of agriculture, which gave rise to city-states, and the invention of electricity and the invention of the internet, these types of seminal technologies for humanity. Bitcoin is that important, and it's Bitcoin, not crypto in general. And most people don't understand this technology, and so hopefully today, in some of my remarks and in the Q&A, we can start to help people understand just why I have this point of view and why I moved away from a relatively successful career in renewable energy to dedicate the rest of my life to building in this space, because it is that important.
So your thesis is that it's Bitcoin specifically, it's not cryptocurrencies generally, and it's not blockchain as a technology, it's specifically Bitcoin?
So if we're talking about money, yes, right?
Yeah.
And so the internet was gifted to us in 1983, the public internet, and we were given a bunch of protocols for free, HTTP and SMTP and FTP, and this is the stuff that the internet runs on, right? We built up on layers, on top of these protocols, all the functionality that allows us to communicate here by Zoom, right? In different parts of the world is just one of many examples, right? And so there were two protocols we could have been given in 1983 that we were not. One is we were given no protocol for identity, right? If you want to identify yourself on the internet, you still have to do it through some third party, a government or a corporation like Facebook or LinkedIn, right? and we were given no protocol for money. And so Bitcoin, many years ago, has already won the battle to be money over IP, internet native digital money, or the de facto protocol for money on the internet. I believe that there will be other protocols that are interesting, especially in the creative economy or the collectible economy, right, where it doesn't necessarily need to be built on Bitcoin. So I'd say I'm a Bitcoin fundamentalist, not necessarily a maximalist, where Bitcoin is money. Anything else that wants to be money just has no chance. But there will be other cryptocurrency protocols that might be interesting for other non-money applications.
Right. So ledger type things and property, things like that are obviously also part of that protocol layer that you would need to have money be worth something. You need to be able to identify property as well. So
That's right.
Why don't you share your slides with us, and then we'll come back with you in 25 minutes or so when you're done, and then we'll have some questions.
Excellent. And on that note, if people listening in do have questions, certainly note them down. We'll make plenty of time at the end to handle that. Paul, can you see my screen okay?
Looks great. Excellent.
So let me figure out how I can advance the screen. There we go. Let me figure out how I can reverse. I'm going the wrong way. All right, I figured it out. So, as Paul alluded to, the last couple of years, I've been focusing on building Bitcoin banking infrastructure. There's kind of three parts in terms of what I'd like to talk about today. Number one, just why Bitcoin. This is not cooperating in the way that I thought. Number two, talk about Lightning Network. And if you're not familiar with the Lightning Network, this is a layer on top of the base layer protocol for Bitcoin that makes transactions effectively instantaneous and free. So we'll talk about the Lightning Network. And then number three, we'll talk about real world use in terms of what we've done at my company, as well as some other businesses, in terms of what we're seeing people actually use these technologies for on a day-to-day basis. And so why Bitcoin? So to explain it most simply, Bitcoin is a trust machine. And what do I mean by that? Bitcoin is simply a technology that allows two people who don't know each other, who don't necessarily trust each other, to communicate digitally and exchange monetary value without any organization in between, no government, no bank, no company, right? And that might seem like a simple concept, or that might seem like kind of not a big deal. And this is why Bitcoin is one of the most important technologies ever invented, because that's actually truly fundamental to humanity. And to say it differently, Bitcoin is effectively free speech or human rights, communicated digitally. If you don't have money, you can't do anything material in this world, right? So if you want to protest the development of a new project in your country, right, you still need to organize people, right? And maybe you need to print signs. Well, to print signs, you need money, right? If you're going to move people around by car or bus to get them to the protest, right, you need to actually own or rent the car or bus and put fuel, right? And so it might seem like a very simple concept, but at its most fundamental, this trust machine, this ability to have uncensorable transactions, to communicate at your own free will monetarily without a bank or government getting in the middle, is pretty important for humanity. And so, my country, the United States, was founded almost 300 years ago, in part because people were fleeing Europe. They were fleeing religious persecution, right? And the United States was founded in, with this concept of separating the church from the state. Now, we haven't exactly done a great job of doing that over the years, but that was one of the founding principles. With Bitcoin, we have, for the first possibility in humankind, the ability to separate money from the state, right? We were kind of born into this world, this modern world, where you just assume money is issued by the government and there is no other possibility, but Bitcoin brings forward this completely new possibility. This gives you some historical perspective. And so what you're seeing on the chart here is basically the last 500 years or so in time on the horizontal. And then what we see is we've basically had 5 different global reserve currencies over the last 5 centuries, starting with the Spanish Empire in the 1500s, followed by the Dutch, then the French. And then, in the early 1800s, the British pound really took hold as the global reserve currency. And then since World War I, for roughly the last 100 years, the US dollar has served as the global reserve currency, and each one has effectively fallen and been replaced by something new. And so since we're roughly 100 years into this adventure with the US dollar serving as the global reserve currency, it naturally begs the question, is it time for something new to replace it as the global reserve currency. Bitcoin is young. It only recently celebrated its 13th birthday. To put this in perspective, the internet was 13 years old in 1996, right? As I mentioned before, it was gifted to us in January of 1983. And if we were sitting here in 1996 using the internet, it is a completely different experience than what we have right now, right? It would typically take 30 seconds just to load a very simple static page, right? Typically, everybody would access the internet paying by the hour, whether you were sitting at home using a service like AOL, or maybe sitting in an internet cafe, right? Certainly you were sitting in front of a desktop computer. There were no smartphones, there were no tablets, there were no anything of the sort. And so many companies that we come to use on a daily basis, whether Netflix or YouTube or Venmo or PayPal, none of these companies even existed in 1996. So I want to paint the picture here. Bitcoin is still very early in its development. Bitcoin is emergent. And so this is, painting a similar picture where we have time on the horizontal in years, and then the Bitcoin price expressed in terms of US dollars, right? And Bitcoin for most of its life has been a speculative asset, right? It's only now starting to emerge in terms of a store of value, a digital gold, if you will, and eventually it will become widely used medium of exchange or payments, right? And this is difficult for people to get their head around, right? Because we've never seen the birth of a new financial system in real time in front of our eyes, but that's what we're seeing here, and that's expressed through the Bitcoin price, right? If you think about birth in nature, right? Birth is not a smooth process, right? It's often violent and volatile, right? That's just natural for birth to be that way. And so I view the Bitcoin price as expressed in US dollars or euros or yen or pesos or any other currency as simply an expression of this birthing process as we bring this new monetary system into the world, right? And for most of its life, people transacted with Bitcoin transactions on chain on the base layer protocol. But we've got this new possibility over the last 5 years called Lightning, which is a layer 2 on top of the base layer of the Bitcoin protocol, which enables these fast and nearly instantaneous transactions to happen, which is part of the story in terms of how we get to this medium of exchange or full global money over the next couple of decades. And so, as Paul mentioned, I co-founded a company called Galoy. Galoy makes Bitcoin banking software. It's an open source company. And in the summer of 2020, about 2 years ago, we went to raise some seed capital for our business. And we had also published our thesis. And most people make a mistake. They'll read Satoshi's white paper, which he published almost 14 years ago now. And in that white paper, Satoshi talks about peer-to-peer electronic cash. And so most people say, okay, peer-to-peer cash. Let me compare that to PayPal or Visa or MasterCard, something that feels like digital cash to me. And they say, oh, Bitcoin is not great because Bitcoin, if you're doing an on-chain transaction, typically takes 30 minutes for that to confirm, right? Because you need 3 block confirmations and each one takes about 10 minutes in order to have certainty. And they say, look, a Visa transaction goes through in 10 seconds at the grocery store. This takes 30 minutes. Bitcoin is a failure. And we, in our thesis, laid out why that's a completely wrong way of thinking. And Bitcoin should not be compared to Visa or PayPal, but should be compared to Fedwire. And most people have never even heard of Fedwire. And they say, oh, what's that? Well, Fedwire is managed by the Federal Reserve, which is the central bank of the United States government. And it's where all settlement of dollars happens, right? People spend dollars all the time all over the world, whether physical paper dollars or with a credit card or a wire transfer, but nobody ever thinks like, how does that actually get settled? How does that get reconciled? That happens at Fedwire. And the analogy is, none of us have access to Fedwire. In fact, Fedwire is a private closed members club with only a couple thousand organizations that can access it. It's very slow and cumbersome. You have final settlement, typically 3 or 4 or 5 calendar days after the transaction happens, right? So if you go have lunch today and swipe a credit card and today's Tuesday, maybe that'll settle at Fedwire on Friday, right? Maybe it'll settle on Fedwire next Monday, right? So it's a closed private members club, accessible only to a few. It operates a limited number of hours per week. You have final settlement in 3 days. Bitcoin, the base layer protocol, is very different. It operates 24/7, 365, right? It's accessible to every human being in the world. If you're a human being with an internet connection, you can participate in Bitcoin, right? There's no discrimination, right? And Bitcoin is very fast. You have final settlement in 30 minutes, not 3 days, right? So we published our thesis, we tried to raise some venture capital and we raised $0 because everybody told us we were 5 years too early to build on Lightning. So then we called Mike Peterson, who's a community organizer who's lived in El Salvador for the better part of 15 years. And, Mike's an amazing individual who's had all these programs running in the small beach town called El Zonte, a town of about 3,000 people on the Pacific coast of El Salvador. And, he's organizing surf camps and other things to keep the kids out of the gangs. And he was trying to get a circular Bitcoin economy going. And he was using existing wallets like Blue Wallet, the wallet of Satoshi, but they weren't really purpose built for what they were trying to do in the community. So we approached him and we said, hey, let us pro bono at no cost to you build for you a banking solution. It's called the Bitcoin Beach wallet. And it is a wallet, a sophisticated wallet on Apple and Google Play stores, right? But there's also a whole banking infrastructure backend. And so we started to deliver this for Mike and his colleagues back in late 2020, about a year and a half ago. And it took on a life of its own, and it became the world's largest owned community Bitcoin bank. And we can talk about what that means. And, this really took off a little more than a year ago in early 2021 during the spring. And then that led to President Bukele in El Salvador last June in Miami getting up and saying Bitcoin would become legal tender. And that actually happened on September 7th of last year. So it's an exciting part of the story in terms of a nation adopting Bitcoin as money. Some people might recognize this Chasm Chart, which was published in 1994 in a very famous book called Crossing the Chasm, which talks about the adoption of any new technology, whether the internet or refrigerators or washing machines or automobiles or the telephone, right? And every new technology as it's adopted by humanity goes through these phases where you have the innovators, the 1 or 2% of people who are, on the bleeding edge of adopting a new technology, and then the early adopters. And these are the people and organizations who use the technology before the vast majority of people start to use it. These logos are probably misplaced. The Twitter Bluebird logo and the flag of El Salvador should really be over the innovator phase. We're that early. But the insight I want to share here is we literally have Fortune 500 global companies and nation states adopting Bitcoin and Lightning in the innovator phase, right? And that's pretty exciting. If we're still kind of 2% of the way into this journey, and we have Fortune 500 companies and nations adopting Bitcoin and Lightning, that's pretty exciting in terms of what the future might hold. Just one additional slide, kind of tying this all together. Back in August of last year, what is that, 10 months ago, 9 months ago, there were maybe 100,000 Lightning enabled wallets worldwide. 1 month later in September, there were almost 10 million, right? This largely driven by the introduction of the Chivo wallet and other products in El Salvador, right? But again, picking up on the story that we're still very, very early, even 10 million people having Lightning enabled wallets is still a very small number, but we're seeing dramatic increase in usage, in these early days. And so, as I shared before, it's a pretty exciting story here where, what's happening with Bitcoin is not a once in a lifetime opportunity, right? You hear people use that phrase from time to time. It's once in a lifetime. You have to focus on this. In my estimation, Bitcoin and the Lightning layer on top of it is so important. It's really a once in a species opportunity. Again, this is the first time you can actually communicate monetarily with another person, and you don't have any risk of censorship, right? You don't have the risk of a bank saying, no, your money's no good here, or no, we're not going to allow you to withdraw it, or no, we're not going to allow you to send that transaction, right? So it's a pretty big deal in terms of what we're seeing. So with that context, in terms of Bitcoin and Lightning, the third and final piece of my presentation here is just talking about real world use and what we've built and what we're seeing. So, if we're going to talk about real world use of Bitcoin, I think it's important to talk about just the kind of traditional financial system, right? And, the traditional financial system, in my estimation, is really overdue for disruption. It's, as I kind of alluded to before in my description of FedWire, the settlement layer for all US dollars, that's a closed system. It's permissioned. You have to ask for permission to use it at any step of the way, right? If you want a credit card, you have to apply for permission to have a credit card, right? If you're a merchant who wants a credit card terminal, you have to apply for that permission, right? If you want to open a bank account, you have to ask and beg for permission at every step along the way. Even once you have permission, that permission can be revoked at any point in time for any number of different reasons, right? So this closed permission discriminatory system is what we have, right? And so, FedWire doesn't scale. We built all these layers on top of FedWire post World War II in order to make it easy for people and businesses to conduct commerce, right? We have commercial banks, and then on top of commercial banks in 1956, we had this thing called Diners Club. In 1958, this thing called Visa, so the first expressions of credit cards, right? So you've got commercial banks and then credit cards and ATM networks and peer-to-peer platforms like PayPal and Venmo, right? And similarly, just like we built layers on top of Fedwire, we'll build layers on top of Bitcoin to make it easy for people and businesses to conduct transactions. But one of the interesting insights that I want to highlight for people is that, you know, in fiat money that's created by a government, politicians always print more money out of nothingness, right? Which is what leads to inflation, which is literally just stealing your purchasing power. It's truly theft, right? And we've seen this in the last 2 years in particular in response to the pandemic, right? We see here a graph of the US Federal Reserve balance sheet, the central bank, where, you know, 15 years ago, it was less than $1 trillion, right? And today it's on the order of $10 trillion, right? Your purchasing power is being inflated away dramatically. And this gets at another principle of Bitcoin is hard cap supply. There can never be more than 21 million Bitcoin ever created in the entirety of the universe, right? In other words, you can't print more Bitcoin. You can't inflate it away, which is an important property. The second point I want to get across here is, you know, for me, how Bitcoin is going to evolve in the world seems pretty obvious, in part because we have a playbook from the past. And so in the 1990s, you know, going back to when the internet was 13 years old in 1996, most of us accessed the internet through these closed permissioned walls on top of the open public internet, right? If you were a consumer, you were using AOL or MSN or going to an internet cafe where you had to trust some other third party who was a private entity just to be able to access the public internet. That doesn't exist anymore, right? We all just use the public internet now, right? Similarly for businesses in the 1990s, you know, intranets were the rage, right? These closed, permissioned, walled systems that only people within a certain corporation could. Nobody talks about these anymore, right? The public internet won over time, right? And the insight here is it might take longer than we might prefer, but open systems always win, given a long enough time horizon, full stop, right? We even see this with David Marcus. So David was at Facebook for 3 years, leading their digital currency initiative. And, you know, he for 3 years tried to create this private permission digital currency for the world, and he failed. And he recently left Facebook. And, you know, in February, he said, you know, Bitcoin is the only thing that we can be guaranteed to have around in 20 years. And in fact, last week, David just raised a lot of money to start his own Bitcoin company, which I think, you know, he's probably the most respected payments executive in the world, right? And he tried for 3 years to do something private and permissioned at Facebook and failed. And now he himself is now building on Bitcoin. You know, Bitcoin, this open network with Lightning on top of it, one insight is, you know, people say, okay, Bitcoin, that's a different unit of account. I don't think in Bitcoin, I think in, you know, colones or pesos or yen or dollars, right? But what people don't understand is just because Bitcoin is communicating a unit of Bitcoin or sats over the network, the user experience doesn't need to be denominated in that. And so you have all these nodes around the world where you're communicating in units of Bitcoin, but the user experience, both in terms of the sender and receiver, can be anything you want. So I have 3 examples here where it can be sending US dollars back and forth, or you can be sending dollars to pesos or pesos to yen, right? And so this is an important insight to keep in mind as we talk about what we've built. You know, this is a similar slide to the one that I had before that I think is a little bit better of a representation. You know, the Lightning Network, this layer on top of Bitcoin, was introduced 5 years ago in 2017. You know, last year, as I mentioned, we saw nation states and Fortune 500 companies starting to adopt it. You know, this trend is unstoppable, picking up on the theme that open networks always win, giving a long enough time horizon. It's inevitable in my mind that Bitcoin will become the most widely used money in the world. And we've got other executives, Jack Dorsey, who created Square, who also created Twitter, you know, saying a lot of our future is probably happening in El Salvador right now. And people just don't realize that. You know, what's happening in El Salvador? Well, as I mentioned before, you know, Galoy went to El Salvador in 2020, 2 years ago, and we, with our own money, voluntarily built a community bank called the Bitcoin Beach wallet, right? And there's a lot of insights here. You know, one of them is, you know, in this town of El Zante of 3,000 people, I don't think there were 30 people who had ever had a bank account before, right? And so we built on top of Bitcoin and Lightning a very useful wallet, consumer wallet on your Android phone or your iPhone with a complete, sophisticated, secure banking backend that allowed people who had never transacted digitally with any money before to start to use this in their everyday life, right? And so that's an important insight. 70% of people in El Salvador don't have a bank account. 40% of merchants do all of their business in cash. And so this took on a life of its own, and I'm happy to talk about some of the insights that we learned here. And then we spun this proof of concept out to be its own company late last year. And it's a true bank, right? It's its own company with its own capital and its own executive team, and it's registered with the BCR, the central bank in El Salvador. And quite honestly, my vision for this business is to become the #1 bank in El Salvador in 5 years' time. And notice I didn't say Bitcoin bank. I think, you know, we have a complete technological advantage. There's no reason why this can't become just the #1 bank period in country, which is pretty exciting. You know, Paul, and you know, when we were setting up for this call, you asked me just to maybe give some context in terms of how, you know, what we're building and what others are building on Bitcoin fits, you know, against the traditional world of banking and payments. So you see 3 simple pieces here, you know, focusing on the left. You know, as I mentioned, not just at the government level in terms of accessing something like Fedwire, but even at the company level, right? Everything in traditional finance is closed and permissioned, right? You have to access things through a commercial bank, right? Who has to give you permission, right? Those commercial bank use core software banking providers. So there's basically an oligopoly worldwide of 4 companies who create all of the banking software for big global banks around the world, right? Similarly with payments, right? You can't just make a payment digitally, right? There's a small number of companies, Visa, MasterCard, American Express, Diners Club, who control these closed permission networks where you have to ask just to be able to use their network, right? These are all very, very valuable companies. Over the last 15 years, as you know, much of the internet infrastructure has moved into the cloud and not on-premises solutions, we've seen new companies try to disrupt these old core providers, right? And so we've got companies, you'll see names here, Mambu and Nimbus, both of whom have been successful. You know, they're trying to offer banking as a service that's kind of more flexible, cheaper, more friendly than the core software banking providers. We've got new companies like Stripe and Marqeta, again, very valuable companies who are trying to disrupt the traditional payment processors, but they're still operating on this closed permission network, right? Bitcoin is an open protocol, right? It's open source. Anybody can read the code anytime they want. Anybody can copy paste the code anytime they want. Anybody can try to build on top of it. You don't have to ask for permission, right? To send a transaction, you don't have to ask for permission. This is a completely new and different world, right? And so for this new protocol, we also have new organizations like Galoy popping up. We're saying, look, we're going to build open source software, which is free, on top of this open protocol, which is free, so that humans can have the right to live their lives and communicate monetarily as they see fit. So we're very early in this vision in terms of what we're building, and there's many other exciting companies building in this space as well. But I just want to give some perspective. #1, that both the Bitcoin protocol as well as many companies building in the space are operating in a very open and different way. And #2, it's still very early days in terms of these organizations and what value they bring. So with that, I'll stop talking. But I mean, I think there's a real opportunity to bring a completely new financial system to the world, one that's open, transparent, fair, accessible, non-discriminatory, which you know, I think is fundamentally important for human rights and human livelihoods. And so I'm excited to be here. Happy to answer any questions you have. And if people want to contact me, they can. I'm the CEO of the Bitcoin Beach wallet in El Salvador. They can email me here. And you can also find me on Twitter at BTCNYC.
Wonderful. Thank you so much for these intro topic points. So just to begin with, you mentioned, you know, you're the Bitcoin Beach wallet in El Salvador. Can anybody become a Bitcoin Beach wallet client to that bank, or is this limited in any way to the geography of Salvador?
Yeah, so there's 2 pieces here. One, there's the consumer side, right? You as an individual just using the wallet on your phone, and then there's the business or merchant side, right? And on the consumer side, basically anybody can download the app. You can download it right now if you're sitting in Costa Rica or elsewhere. We do actually restrict downloads in the US. So I'm a US citizen, I'm sitting in the US. I cannot use the Bitcoin Beach wallet, but people in
is there a reason for that? Is there
well, actually, I mean, there's
regulatory?
Yeah, it's regulatory reasons in terms of money transmission laws, in terms of why we don't allow US users to download the app. But most consumers in most countries can just use the app right now if feel free to do so. For businesses and merchants, we're restricting that just to in-country right now in El Salvador, just because we want to be able to support those businesses and merchants in a real way.
And then you've mentioned a little bit about why the Lightning Network. You talked about kind of the time to resolve settlement versus Fedwire. But exactly what does it do? How does it do that so quickly? What is the difference in the way it's processing?
Sure. So, to fully understand Lightning, you need to have some basic understanding of the Bitcoin network. Bitcoin on the base layer protocol, if you're sending a transaction, right, it's basically a network of computers that are just chattering, right? And every 10 minutes or so, they resolve a block that basically says all of these number of transactions that chattered are valid, and these other transactions, they're not valid, right? And that block has certainty in terms of saying, hey, these are good transactions and these are not good transactions, which leads to, that's a deeper conversation, but that's part of why you can have Bitcoin where you can't copy money or can't double spend money, but still have the ability to transact with no companies, being the referee, so to speak, right? And so with Bitcoin, you basically want to have 3 block confirmations, which roughly takes 30 minutes in order to have the certainty of transaction validity, which, isn't great if you're trying to pay at a restaurant, right? Or buy a pair of jeans at the store, right? And so, the internet was built up in layers, right? And also the traditional banking system was built up in layers, and Bitcoin will be built up in layers as well. And so this second layer called Lightning, which is very exciting, which has been around for about 5 years, is, the best analogy I have is like opening a bar tab, right? And so if you go out with your, let's say a group of 10 friends to a bar tonight, right? And one person's going to pay for everybody because, they had a great day and they're feeling like treating, right? You go to the bar and you give the bartender your credit card to open the tab at the beginning of the night. The bartender doesn't swipe the card every time you buy a drink, right? So let's say you have 12 beers and 4 martinis and 6 whiskey drinks, right? All the bartender does is one time at the end of the night, swipe that tab to pay for all the transactions. And so the Lightning Network is somewhat similar, where basically people open what are called channels, where people who have nodes on the base layer will say, look, I'll put a little bit of Bitcoin in this channel in order to facilitate communications back and forth. And you can have unlimited number of transactions going back and forth in that channel, just like you would buy as many drinks as you want at the bar. And then only one time when the 2 participants in that channel want to close the transaction, then do you settle back to the base layer, right? And so with that analogy, there's many thousands of people running nodes with many, hundreds of thousands of channels open simultaneously that facilitate these transactions one layer higher than the base Bitcoin layer, that allows these transactions to be nearly free and instantaneous.
So then the Galoy technology on top of that, does it facilitate between the consumer and the commerce this tab? Is it the kind of the intermediary there to kind of manage the tab between them? How does that technology work? And then where does the wallet or the Bitcoin Beach come into play on that technology? Explain those additional layers.
Yeah, so there's many pieces, right? So the easiest thing to, the products and services that we introduce or any other company building on Bitcoin and Lightning in terms of the end user experience are very easy to imagine, because they'll be the same products and services that people have in traditional banking and payments, right? So think about what is on offer today. You can open a bank account and you can have a checking account and a savings account. You can have a debit card for ATM access. You can have a credit card for spending, and then paying that off at the end of the month, right? There's all these different applications. And so, what Galoy has built is a number of different modules, where part of it is, a module that makes it easy to manage payments, right? Part of it is we've got modules where we can actually have a consumer-facing application on your phone. Then we've got other modules as well to, maintain custody, secure custody of the assets on the backside, or do different reporting, right? Or just do accounting, track debit and credits, which you need to do if you're a business, right? Or, new modules that'll be introduced in the future, will be related to, fraud or velocity checks, right? So network operators like Visa or MasterCard will run checks to make sure that they'll look at the patterns of payments, right? To make sure that things that are, look suspicious or getting flagged, so maybe people aren't stealing money, right? And so you can think of all the products that will be built up over time, but what Galoy has built with its open source software is a series of modules that makes it easy for a consumer or a business to say, look, I want these feature sets, right? And kind of just pull them off the shelf and use them on day one without having to reinvent the wheel, so to speak.
So then, Chris, you call it banking, right? In El Salvador, you call it the Beach Bitcoin Bank or something like that. You mentioned in one of the slides. So how is this banking rather than just kind of a payment intermediary or like a QuickBooks for businesses? Why is it actually a bank then?
Sure. Well, I mean, think of it from the consumer experience. So you can, let's say you go to El Zonte next week with your family on vacation, right? You can download the Bitcoin Beach wallet and you can start using it right away, right? And you can send and receive money, right? Keep in mind, most people who are the early users of this Bitcoin Beach wallet, they lived on cash their whole life, right? If they wanted to buy something or sell something, they just did it with physical dollar bills. Now, for the first time, they can save money, right? So they can receive Bitcoin, whether on chain on the base layer protocol, through a Lightning transaction. Within the app, we built a username feature. So if you were registered the name Paul in the app, from my app, I could just send you money at Paul. I don't even have to scan a QR code or paste anything, right? So just the simple ability to send and receive money and hold on to it and save it. This is novel, right? For many people using the app. Then, there's new features. We're about to introduce what we're calling a synthetic US dollar, where right now, if you use a Bitcoin app and you're also have that app connected to a commercial bank, you can trade your Bitcoin for US dollars or whatever fiat money you want and vice versa, right? With our new synthetic US dollars, we provide that ability to have fiat price stability, to think in dollars or pesos or colones, but without being connected to a commercial bank, right? And that's very important for all the reasons that I described before, where the system is very closed, very permissioned, very discriminatory, right? So think about this. Now you go down to El Zonte, somebody sends you a little bit of Bitcoin, you want to hold on to that Bitcoin, but you're concerned about the price volatility of Bitcoin. Well, within our app, you can take your Bitcoin and put it into your US dollar wallet or your colones wallet, right? But, and then move it back if you want back to Bitcoin as you see fit. But we enable that possibility without connecting to a commercial bank, right? With a commercial bank, you still need to have their permission. With a commercial bank, they can close your account at any time. So this is a powerful new product that we're very excited to introduce to the market, where it truly gives people freedom to transact digitally, to save digitally, to keep their money denominated in Bitcoin if they want it. Maybe they think the price is going to go up a lot in the future. Keep their money denominated in US dollars or different fiat currency if that makes them feel more comfortable. And so hopefully that's giving you a little bit more insight in terms of the products that we built here. But this is all, again, on Bitcoin, and you don't need the permission of these other traditional actors, governments, or companies in order to live your life.
And that actually makes me think a little bit about the disruption to the banking sector itself, right? You think about banking as kind of a solution for communities and institutions, the way you've described it, in which there could be a lot of banks, so to speak, right? What prevents then from everybody just kind of creating a bank? Or is the idea of the bank?
That's the vision, right? I mean, I can only speak from what I know. So I grew up in the United States of America, right? In the United States in the 1950s, 1960s, 1970s, post-World War II, we used to have true community banking, right? You might live in a small town of 10,000 people, and the gentleman or woman who ran the bank would know everybody in the town, right? And it was the townspeople's actual money, right? And if Mary wanted to borrow $5,000 to start, some kind of shop, right? The townspeople would get together and say, are we going to give Mary our own very money, right? In order to start a bank. And there's a point to the story, so bear with me for a second. The world of banking has changed very dramatically over the last 50 years, where it's become very consolidated, right? And you've got some nameless, faceless, bank corporation that sits in the capital city, right? And you just hope that it kind of works, and you have no real relationship with your bank, right? And why did that happen? Well, on a fiat standard, right, the cost of compliance is very high, right, to deal with KYC, know your customer, and AML, anti-money. And so there's an incentive in order to be most economic as a bank operator on a fiat standard to be bigger, right? Because you get economies of scale, right? But to your original question here, there's no reason why everybody on Bitcoin with open source software that we and others have created can't create their own bank. In fact, we want that to happen. There's the possibility that your church or your temple or your mosque or your town or your university or your country club or your sports league or your charity can set up its own bank. And I'm not saying every organization should, but we want to enable that possibility where, if you say, look, this is our money and we want to control it as we see fit, that possibility, the pendulum should swing back to where you have that possibility available to you in the future.
And let me extend that a little bit. You've talked also about how you're really creating part of a Bitcoin circular economy. So you're going beyond just the institution and the transaction between customer and institutions that they're doing business with. What is this idea of the Bitcoin circular economy to you? How is it contributing then to some broader vision for developing these economies?
Sure. I mean, we've seen it. And again, just to go back to the Bitcoin Beach wallet and El Zante, where, there's a couple of possibilities or a couple of things that we're actually seeing develop. One is people, saving money digitally where they just never had that possibility before. Two is, if you're using some kind of traditional digital solution like a credit card, it's very expensive to use a credit card, especially for small transactions, right? You might go into a bodega or a small vendor and they might have a handwritten sign that says, no credit cards for a transaction less than $10, something like that, right? Because the fees just to process one transaction that the card network operators like Visa or American Express charge are so high. Well, with Bitcoin and Lightning, it's very different, right? The fee is almost close to zero, right? There's street vendors in El Zante who push, little carts down the dirt road and sell bread for 25 cents a loaf, right? And they transact all day on Lightning and take in all these payments because it's actually economic to do a transaction for 25 cents when that would be, there's a 0% chance that would ever happen, right? So there's new possibilities in terms of people saving. There's new possibilities in terms of merchants now conducting business with tourists or even just their fellow townspeople in a way that never happened before, right? And so, I don't know exactly how the future is going to play out, but I have thoughts in terms of how this opens up exciting new possibilities. But part of it is providing services for people who just never had service before. And part of it is providing, new ways to conduct commerce that didn't exist before either.
Wonderful. So you've mentioned the experience in El Salvador with Bitcoin Beach. I think we've heard some about here in Costa Rica, Bitcoin Jungle. Are you familiar with that initiative? Can you tell us a little bit about what's going on there? And is there any relationship between the two? Is there some kind of a partnership? Is there something that now can happen between these economies in Salvador and Costa Rica because of these two initiatives?
Yeah, I mean, it's Bitcoin Jungle is an amazing story. And, this speaks to the beauty of open source software, right? So the Bitcoin protocol is open, right? Just like the internet protocols are open. You don't need permission to use them. You just use them, right? Galoy creates open source software. We give away our software for free, right? Anybody who can download it right now, you can go to our GitHub, use it as you see fit. The Bitcoin Jungle story is three software engineers from the US had moved to Costa Rica in 2020 during the pandemic, right? And they just established residency there. They forked our code without our knowledge, which they're welcome to do, right? Because it's open source software. And they created their own instance, effectively mimicking the Bitcoin Beach wallet in El Salvador, and they called it Bitcoin Jungle, right? And then they started deploying it, and then they said, wow, this is really exciting, but we need Galoy for you to help us manage the instance. And so we have a very good working relationship. But Bitcoin Jungle is separate from Bitcoin Beach wallet, but they're both supported by Galoy, the creator of the software, who's continually updating the software every day. And what we're seeing with the Bitcoin Jungle project in terms of merchants at farmers market and other venues in that part of the country, again, it's similar, where it's merchants who were never transacting digitally before now have all these new possibilities, particularly as they interact with tourists who might want to come and spend their Bitcoin. And that's kind of a third point that comes to mind, where we've seen a real positive impact to El Salvador in terms of positive GDP impact from increased tourism that never would have happened. There's thousands of people going to El Salvador every month just because of Bitcoin, right? Who normally would have never thought about visiting El Salvador. And so, there's all these kind of benefits that once you get the flywheel going and people understand that you accept Bitcoin, it opens up new possibilities for the merchants in so many different dimensions.
And then just to touch base on the experience of El Salvador. So El Salvador, as you mentioned earlier, has made Bitcoin, part of its legal tender. Is that kind of a strange idea to you, that idea that a government makes it a legal tender? It kind of seems to almost counter the principles of the open economy that you're talking about. And if you think it is a good way to go, what would your recommendation be then for other developing nations, Costa Rica in this case, to adopt or not Bitcoin in that sense?
I'm sorry, I was reading the chat. Can I just ask you to repeat the question?
Yeah, it was the idea of Bitcoin being adopted as legal tender. Like
For sure.
it almost seems to go against kind of the spirit of the beast, right?
I mean, look, to be candid with you, in some ways it does. I mean, it's look, full credit to President Bukele and his team. I mean, they're on, like, they're literally writing history before our eyes, right? And so, and people say, question whether there are nefarious motives or what's happening there. I think, look, it's certainly not perfect, and we can talk about some of the flaws of the rollout of the Bitcoin law and the actual implementation of the Chivo wallet, the government wallet, because it certainly wasn't perfect. But I think, broadly speaking, is a very powerful step in the right direction, right? We had 44 central bankers from 44 other countries in San Salvador yesterday, listening to Nicholas, my co-founder, and others talk about the Bitcoin Beach wallet and the software we've created and how it fits into this new Bitcoin law. To your point, yes, there is a bit of, it's not natural to kind of force a Bitcoin law on a population, and that's probably not 100% in line with the ethos of what Satoshi had in mind, right? And I think that gets at a broader point. I think the bottom-up approach is not only more interesting, I think it's just going to be much more effective than top-down approach of nation states adopting, Bitcoin as legal tender. So, on Twitter in particular, people get very excited about the prospect of what country will come next in terms of adopting Bitcoin as legal money. I mean, that's interesting to me. I certainly pay attention to it, but it's not what gets me most excited. What's much more interesting to me is what will happen bottoms up, where people just voluntarily adopt this because it actually improves their life in some way, or brings them a new possibility. And I think that's how Bitcoin's going to take off, kind of take over time, is through this bottoms up approach. Just kind of tying it into one of the questions I see here in the chat. Somebody is indicating that the fixed supply of Bitcoin is a flaw, not an advantage, because you need money to be price stable. I agree with that, right? And this gets to one of my opening remarks, where we're seeing the birth of this new financial system, and the Bitcoin price is extremely volatile, right? We were creating this synthetic dollar product to give any of the users of our wallets the ability to opt out of that price volatility, because you think in fiat price, right? So that's one interim solution. But the other thing to keep in mind is Bitcoin is on this journey. It's only 13 years old. As it becomes bigger and bigger and goes from roughly $1 trillion asset today to a $10 trillion asset to eventually $100 trillion asset, right? It's just like putting more water in the bathtub. When there's a very small amount of water in the bathtub, your hand can make a big splash, right? As the bathtub gets bigger, or a pool of water, right? The bigger the body of water is, your hand has much less of an impact, right? And we're going to see that as Bitcoin gets bigger, has more people using the network, has more monetary value locked up in the network, the price will become much more stable over time. And I have a different point of view, that I think Bitcoin can actually become the most widely used money, because we will start to see that stability over the next 5, 10, 15 years.
Yeah, and it would seem that instability, or the volatility now, which really is happening more because of the investment in the trading side, right? It's not the local economy that's creating volatility, but the local economy, the Beach wallet, for example, is affected by that. So how do you convince a community to do this when you have that volatility? How do they withstand that volatility? You mentioned one solution in yours is that you can peg it to the fiat currency, right? Is that the way that you would solve that in the interim?
I think it has to be. I mean, look, I'm a true Bitcoin believer, right? I've been operating in this space for more than almost 10 years, I mean to say. The reality is, I still think in terms of US dollars, right? I want to go buy a sandwich, I want to go buy a home, or anything in between, right? I think of Bitcoin probably more than most people do, but I still think it in terms of dollars, and we just have to acknowledge that reality, right? And so, yeah, we need these tools to facilitate this transition. But I think I would encourage people listening to this broadcast to keep an open mind, right? Think about how the world was 20 years ago, or 50 years ago, or 100 years ago. There's so many technologies that, if you were living in those points in time in the past that we have today, that were so unthinkable. I think, I have complete conviction that Bitcoin will become a commonly used money. And it's definitely going to be a bit of a bumpy transition to get to that point. But, like you said, Paul, we need to create tools in order to facilitate that. It's not just going to happen like instantaneously.
And just to build on what you were saying about, this early volatility in these new protocols and new layers as they're developed, Costa Rica experienced that, Chris, in the early internet. We had a monopoly provider for the internet other providers would come in, even doing things like developing websites, and we would be kind of not compliant with the monopoly power, right? So even early internet use here was very unstable because we had that regulatory framework. That said, what should happen in this market? What should entrepreneurs and tech enthusiasts and innovators in the fintech space be doing to drive innovation without coming, in arrears with the regulated banking sector? How do they navigate in these developing economies that moment where you're going to get some pushback maybe from the traditional banking sector, because like you said, there's a lot of wealth and power in certain hands and certain institutions. They're not going to want all these new players. So what do they do? What's the way to sort of break through and become innovative in this space?
I mean, the answer is to just build, right? And that's kind of a bit of a cheeky, pithy answer, but let me explain it a little bit more. We would have loved to have launched, our first wallet in the US 2 years ago, right? It's the biggest financial market. It's the most robust financial market. And there was a reason why we did not, right? Both because the regulatory burden, in order to be compliant in the US is so high and so expensive as a young, startup organization, you just can't bear that cost. And there's also poor tax treatment in the US where every transaction is taxed like a capital gains event, which makes no sense when you're going to buy a cup of coffee, right? So that's part of what led us to El Salvador, where there was basically no regulation in El Salvador. And that was attractive, not because we were trying to do anything malfeasant or illegal, right? We just wanted to innovate and provide a real useful service for people, right? Without having the burden of paying lawyers and filing all this paperwork with the bureaucratic government, right? And so even in El Salvador, it's changing now, where there's all kinds of new laws being put in place or new regulations being put in place on the Bitcoin sector, right? Which is understandable, but the simple answer is to anybody who's an entrepreneur is just build what you can, right? And push the envelope forward. And then, the regulation will always be lagging and try to catch up, and you'll have to deal with that. But I'll put it this way. If we thought about all the reasons why Galoy or the Bitcoin Beach wallet would have failed before we started building, we never would have built anything, right? Because
good point.
Like you think about it logically, you're like, it's crazy to even try, right? But like somebody's going to try, right? So just get out there and start doing it.
Good point. And in fact, we had a session on these issues about a year ago with the head of the central bank in Costa Rica. And his advice was the same. He said, you guys should be out building. Don't worry about regulation. If something comes up, we can figure that out later. But you should be enterprising and innovating and pushing the envelope. So I think,
it's not easy to do, but it's really the only way.
That's right. A few other questions. I know that you have to run at the top of the hour. So looking at our chat, we have a question from Thomas Birch. He says that there are probably some institutional obstacles to the adoption and open offer of Bitcoin. Considering the threat of the technology that presents to the classic banking sector, how would you interface with the classic banking sector, or do you just not interface with them? So not the regulatory part, but the actual other banks in banking sector itself.
I mean, look, the reality is we still interface with the regular banking sector because we need to in order to make payroll and pay our vendors and, do certain things, right? And so, there's a reality to just, operating a proper business, whether in the US or El Salvador or anywhere else. And so, I mean, we have commercial banking relationships and use those traditional banking payments rails. But, as I mentioned before, without belaboring the point, we're also creating new rails, which allow you to have kind of fiat price stability in your mind without accessing the commercial banking system as well.
Great. A question from Ivan here in the chat. He says, there are people out mining Bitcoin because of the rewards. If the fees are almost zero in the Lightning Network, how do you incentivize people to do the nodes there? Is that a part of it?
That's a fantastic question, right? The simple answer is, if you're looking to profitably run a Lightning node simply based upon the fees you might charge to push payments along, it's not really a profitable business today. So there's a real question there, right? Like, we're, to kind of maybe exaggerate slightly, we're kind of in the hobbyist phase. I mean, we've moved a little bit beyond that, but in all things, we're kind of at that end of the spectrum. And there's real questions. What are the sustainable business models Galoy is open source software. We'll give away the software for free, right? Part of the reason why we're confident to do that is, not just standing up and managing the nodes, whether Bitcoin nodes or Lightning nodes, but then also managing all the channel liquidity, processing payments, dealing with bugs, dealing with unforeseen economic attacks. We have confidence that people will pay Galoy for, a hefty fee for a monthly service just to manage all of that on their behalf. And so, it's a very good question, and one that nobody really knows the answer to. The real question is, how do you build profitable, long-term, self-sustaining businesses operating these new software and on this new network? And nobody has the definitive answer to that just yet.
I'm going to ask you one more question, Chris. Comes from our chat. This is from Edgar. He asks about, what do you see in the future? Are there some existential threats to Bitcoin? Is there something else in the horizon that you could cue us into, that you see that it's either adoption or retraction would happen?
Yeah, I mean, look, basically the biggest existential threat to Bitcoin, I think, was removed some time ago because the networks got big enough, which was a 51% attack, right? If somebody controls 51% of the computing power on the network, they could effectively rewrite transactions or double spend money, right? The network is so big at this point, even if a very well-funded state actor like China or Russia wanted to attack the network, it just wouldn't be feasible. And even if they did, we would just fork the code and reboot the network over here to put it in layman's terms. So basically, in my mind, the only way to stop Bitcoin now is to shut off the internet, right? Now, could the internet be shut off? Sure, but if the internet gets shut off, the world's probably got bigger problems than, how do you spend your money on a day-to-day basis? And so, there will be regulatory challenges for sure, right? And Paul, I'm happy to take another 5 or 10 minutes here if you and your colleagues do it. We don't need to do a hard stop just now.
Absolutely.
So, I'll roll into another analogy where, existential threat, I think, basically is non-zero, right? Well, are there many enemies to Bitcoin? Yes, right? And so, the global media, which is controlled by an elite few, and governments will still try to slow Bitcoin adoption as much as possible. So I'm not naive about that, but like, existential threat to me means, will it just simply die and go to zero? I think that basically can't happen unless we shut off the internet. But the analogy I give a lot of my friends is one related to tobacco. So in the United States, post-World War II, from 1950 to 1990, we had 6 big tobacco companies. And the 6 CEOs of those tobacco companies never publicly got up and said, smoking doesn't cause cancer. They had the scientific evidence in 1950 that if you smoke, and unless you get hit by a bus, smoking would kill you, either from heart disease or lung cancer or whatever the case. They never denied that publicly. What did they do? They just raised a question around it. They said that the smoking caused the bad kind of cancer, or do we really know how much cancer it causes, right? And all that BS stopped in 1989 when the 6 CEOs of the 6 big tobacco companies were forced to testify in front of the US Congress and share the scientific documents they had in 1950 that scientifically proved that if you smoked, it was going to kill you, right? That same playbook is being run by governments and banks today. They don't say, Bitcoin doesn't exist, right? Or they don't say Bitcoin isn't money. But if you watch the mainstream media or listen to government testimony or these papers that they produce, basically everything in the mainstream media about Bitcoin is basically wrong, right? That Bitcoin mining is bad for the environment. No, it's actually good for the environment. We can have a whole conversation about that, right? We could take it point by point, and this doesn't surprise. So, we will see many powerful people who control governments and media try to discredit and lie about Bitcoin blatantly in order to create confusion for ordinary people and slow down its adoption. And that will continue to happen for the next 10 or 20 years. But is Bitcoin going to die? Short answer is no. Bitcoin will keep trucking along every 10 minutes. New block will be confirmed. And the network will be just fine.
2 more questions then for you, Chris. One is from an anonymous poster here. He asks, how does a Bitcoin Lightning-based synthetic US dollar token work? And how does it differentiate from an algorithmic stable coin that has failed in recent days?
2 fantastic questions in there. One, it is stable. It is not a stable coin. There is no token involved, just to be clear about that. And I'll explain what is happening behind the scenes. The simple version is there is a new risk introduced with our solution, right? In any new solution, there has to be some risk involved, right? Whether it's an algorithmic stable coin that's under collateralized, and we saw in the last 2 weeks how that leads to bad outcomes, right? Or, so what is the risk that we're introducing with the synthetic US dollar? Well, it's a new counterparty risk. And so what we're doing is we're simply taking the Bitcoin you have. Let's say you have, $300 of Bitcoin in your wallet right now, right? And you want $200 of that actually in dollars, right? Because you need to pay rent at the end of the month and you need certainty that you can use that, despite what might happen to the Bitcoin price. What's actually happening on our back end is we have the Satoshis equivalent to $300 and we're not selling them, right? If you wanted to trade them for $200 on an exchange, you could, right? What we're doing is we're still maintaining a long position on that amount of Bitcoin. And for the amount you want to put into US dollar wallet, we're creating an equivalent short position on a trusted exchange like FTX or OKX, one of the largest, most reputable derivatives exchange, right? And so we still have all of your Bitcoin, right? We've just created an equivalent short position at that moment in time to give you, the user, the certainty of fiat price. And then when you want to get your money out of an ATM or just move it back to Bitcoin, we will just close that short position. And let's say you're at a Bitcoin ATM and you actually want to pull those $200 US out. What we would do is we would close the short position and then just send that equivalent Bitcoin to that ATM in real time. You as the user, you would lose nothing, right? You would have the stability that you would want. It's just a very different way. And so the new risk is we introduce the counterparty risk of a trusted exchange, right? So could the exchange fail? Could the exchange not honor their agreement? Sure, very low probability, but that's the new risk that's introduced with our solution.
Great. I'm going to give you one more question. This is from Mauricio. You mentioned FTX, and the CEO has been in the news a lot lately. One of the comments that he made was regarding Lightning Network, but the question from Mauricio is, why is it so difficult for these exchanges to publicly accept, implement, and promote Lightning's value proposition? And what can the users of the Lightning Network, Galoy and others, do to help promote that?
Yeah, these are awesome questions from the audience. So your audience seems pretty sophisticated here, so I'm enjoying these. The short version is just understand. It's easy to understand the answer to the question if you understand the business model for these exchanges. So there's exchanges that are Bitcoin only. In the US, we've got examples like river.com or swan.com, right? Where you can only, buy or sell Bitcoin. Those are your only options, right? Against US dollars. Then you've got other exchanges, right? Like Kraken or Coinbase, to use two more US examples, or Binance or OKX to use more global examples, FTX, where you have a whole slew of hundreds of coins, right? You can trade Bitcoin or Ethereum or Solana or, coins that I don't even know what their names are anymore. And the business model for an exchange to be profitable, running exchanges is very profitable, as people trade more, right? You want people to trade more because that's how you generate more fees, right? And so, it's not a priority for any of these global exchanges that are trading hundreds of coins to facilitate instant low cost, withdrawals or deposits via the Lightning Network. Now, you've seen exchanges like River be early adopters of Lightning, in part because they're just true believers in Bitcoin and they want to support the Bitcoin ecosystem and they want to support the adoption of Bitcoin as money. And so it just to call for what it is, it's less about profitability and more about philosophy in terms of why these exchanges are integrating Lightning. You did see that Sam Bankman-Fried, who's the CEO founder of FTX, yesterday was effectively misquoted by the Financial Times.
Okay.
Right? And that fits with what I just said 5 minutes ago, where you will see these media organizations like Financial Times literally just lie, right? Not only will they tell the wrong side of the story, they will misquote or at least put it in context where it seems like it's misquoted. The CEOs of some of the most, the largest companies in the world, right? And Sam, to his credit, same day yesterday, came out and said, I was misquoted, number one. And number two, he made a public promise that FTX will swiftly adopt Lightning integration, right? But the whole question as to why they're not doing it voluntarily is just not profitable for them to do so.
I'm going to ask one last question. As you mentioned, we have a brilliant audience here. A lot of them are entrepreneurs in this space. I mentioned that there are people here from the FinTech chapter of CAMTIC, the Blockchain Association, the Central American FinTech Association as well. What recommendation would you have for these entrepreneurs as they're looking at, you said go out and develop, right? Where are the opportunities? What should they be thinking about? Where do you see the the target heading so that they can, hone in and develop what the future needs?
I like this question. I'm almost hesitant to answer it, though. I'm not trying to dodge the question.
You don't want to guide.
Put it back to the entrepreneur, right? Like, I've got my own point of view in terms of what the world needs and what needs to be built, right? But like other entrepreneurs, like I'm sure there's lots of smart people on the Zoom here, right? You guys are seeing stuff in the world that I don't see, right? I don't see a small sliver of the world. You're seeing a problem, try to develop a tool to fix that problem, right? Whether it's in your local community or with relation to remittance or like God knows what, right? And so that's why I don't want to bias people. There's so many problems to be solved in this world and so many businesses to be built solving these problems. If you see a problem, go tinker with it. Go try to figure it out.
You heard it here first. Chris Hunter says, let's go out and solve the world's problems. That is our call to action. So on behalf of CAMTIC, the IT Chamber Association here in Costa Rica, and the Lead University, by the way, Lead University does have a program in blockchain. So for folks that want to learn the technology, Nancy Quiroz is the coordinator and director of that. There's also a data sciences program. Juan Pablo Blanco can help you learn more about what we're doing in that area as well. Chris Hunter, thank you so much for taking the time today. I know that you've got a lot of other conferences and some other journeys to embark on. It's been a great pleasure to have you with us. We hope you can come back soon and do this again.
This was great. Thanks for having me. Thanks, Paul.
Thank you. Bye now. Thank you all for your participation today, your questions, your comments. Lead University is here to serve you. Como mencioné, tenemos el programa de blockchain y tenemos la Escuela de Ciencia de Datos. Estamos aquí para servirles. CAMTIC también les invitamos a participar en el capítulo de FinTech y también, obviamente, la Asociación de Blockchain y FinTech de Centroamérica. Muy buenos días y muchas gracias a todos.